inform those of you on FXTM Invest what's up with it. In case you're looking at the tracking account on FX, so my FX book, and you're thinking, like, hey, it's going up. Why the sudden drop in equity? So reason for that is that today there's been news like China is retaliating with trade tariffs, and it's causing quite a big shakeup. So how we're being affected is we're specifically being affected on the USD JPY and also the Euro Aussie. Okay, so these two are the ones that are having most of the floating loss, which is a very sudden thing. And here's my plans. Okay, this will be one situation that I do not intend to do not intend to take the hit, because I feel that I shouldn't say that. Based on analysis, situational review, I feel that we actually have a very good shot at this. So let me give you a little bit of an outline what happened and why I'm led to think this way. Okay, so on Friday it closed on a high and it gapped down. It has yet to gap up. So the gap closing is definitely bound to happen at some point. Okay, some gaps do not close historically, but most gaps do, and that will be the general market intention. Okay, couple other things also are going for the scenario, and I also want to tell you a little bit about a good thing that happened with the money management as well. So as you can see that for this one there's like 5 trades running only, and for USD JPY there's actually more than that. There is 8 trades. Okay, so I've actually set the max trades at 6. Right? So what happened to 7? What happened to 8? These are manually deployed. What do you mean manually deployed? So let me tell you what happened. Okay, this is what I did. It was at 6, and then when I felt that it had hit a critical Fibonacci level, I decided to remove the EA and then reattach it to the chart, added in one extra level, 7, and did the same for 8. Okay, now based on my analysis of the market right now, this is what I'm looking at. First of all, very simple trend line, best fit line. Looking at this is going to be a bounce point. Also, if we look at the M30, there is a what do you call that? There is this reversal pin. So reversal pin is a pin bar that closes in the previous candle's body. It's a reverse pin, but nonetheless it is a pin. So next up, what else do we have on the cards? I have different news, but we'll take it situationally. Okay, so if I did a Fibonacci here, the 43%, 43.6%, actually somewhere down in this region, a little bit worrisome. I feel that okay. So here's what's going to happen. Okay, I'm setting off here. I can see strong reversal signal at this point, and the next thing is that as you guys know, I do have a trailing profit lock-in. So this should be coming back quite some distance. I will be also giving the trailing stop some tighter settings, so it will follow it very tightly. What I'm looking at up front right now is I'm looking at some kind of a retracement based on what is happening right here. So let me just, okay, I'm going to draw Fibonacci from top to down right here at this spot. Based on this drop, I'm at least looking for it to come up to the 38.2 region, 27. So that will give us a good 20 pips. And yes, exactly, that's based on the entry. Okay, this is not the account. The account is over here. The account position of entry went in at 7.4. Okay, So we're looking at trading stock kicking at 274. You're locking in 20 pips, and there'll be a nice amount of profit from that, and then they can re-enter later on for all I care. So when I close, okay, if I'm awake, I'm going to be reverting it to 6 max trades. Sorry, no, 7 max trades, and then next course of action. Okay, next course of action. This is the plan. This is the plan. So first and foremost, I'm going to. Okay, so first and foremost, the supply-demand zone is 108.503. Quite some distance down, isn't it? Yes. Fibonacci's. I cannot find any Fibonacci level for this. Not exactly pinpoint. So what does that mean? Market confusion. Market may look at. I hope the market looks at the trend line thing, but may or may not be. Okay. So why am I letting this trade go through? Why? Because I think there's a good chance for a pullback. All right. So short hit and run thing, and once that happens, they're disabling that, and then we're gonna let it take the next position only when it closes in and comes out of here. Okay, what other actions have I taken on my part? I've closed the 2 big trades at this point, taken a small loss on these ones. This is a swap-free account. And actually, hang on, there is a negative. Yeah, there's a positive swap in this one. So, taken what do you call that? Taken a small hit here, basically about a day's worth of profit. Give a day's worth of profit back to the markets. I mean, heck, we did really good last week. So, reduce it to 7 trades, and I plan to open the next trade only when it hits this area. So we know that it's not going to go in the free fall, because free fall zone is quite big. It's not going to be that big. So it's going to be just about this area between, like, we're looking at just around about this line and this line. Now, Fibonacci, as you guys know, it can be drawn a couple of ways. This is the other way. So actually, if I drew it this way, that's a good case scenario. So I would like for it to do this. By the way, FXPrimus. Yes, I was going to get to that. FXPrimus PAMM is it's in a very different situation. Okay, FXPrimus PAMM is actually doing very well. And in fact, as of now, it is a little bit confused with the lot sizes, because I've been changing lot sizes and I'm a bit confused. So I have to, so I mean, basically it's under control, taking very small positions, very small floating loss, and that also means very easy to recover, not a problem. The other benefit of, okay, previously from what I felt about the PAMM, okay, there is good and bad to it, but I'm now starting to see the good. Okay, the bad is that if people suddenly deposit large amount, it will be underleveraged. The performance will be worse than my FX book. Okay, but if people suddenly deposit, not only the account underleveraged, it also means that we're gonna have a lot more margin, and it works great for like systems using martingale, which just use martingale in smart ways. So how that works is that when the margin is constantly increased, it will be able to what do you call that? Like, I mean, we all know martingale is one of the methods that should be used very sparingly, which it is very sparingly used. The other thing is that it is also a method for unlimited pockets, and with a constantly growing PAMM, that can happen. So we just need to be a little bit behind the market. Previous idea was to do auto lot sizing, and now I feel that, hey, actually, this could be a blessing in disguise. So I'll retain manual lot sizing for a while, observe it, and then I think we will And what I'm also doing right here is I've started to introduce scalping on Euro USD as well. Okay, so if you guys look at the history, we're already starting to have some USD trades like this, and I have also been increasing the trade size. So actually starting from today, it's going to go up from 0.02 to 0.03, and we're going to keep increasing that. So what I wish to do is to kind of reproportion the spread of trading between like a hedging strategy, which like the market conditions right now. I mean, this last month was dramatic. This month's been quite good. Now suddenly a little bit dramatic. So I wish to kind of like reproportion of the risk for strategy that can remain shorter time in the market, and this will help us to, I think it help us to okay. What's also good about this is that the fixed lot size will have very manageable stop loss, and also going to do hybrid. Okay, I am having ideas of, in fact, giving a bigger allocation to this and hybriding it with hedging. Let's say if it gets to a situation when markets move 200 pips and we have got a bunch of trades open all the same size, and then we're going to start looking at entering positions intelligently on key supply demand zones, Fibonacci's, with confirmation from the market. Okay, so it'll be a little bit like semi-automated, because there'll be certain positions, like as what I mentioned with this one, I'll be self-deploying. Self-deploying as in, like I'll look at the situation and then deploy the trade. Okay, so that's basically the game plan. Right now, as you can see, this is a little bit outside of 5%. I have shifted the goalpost only in this one instance and this one instance only, by closing two biggest trades, able to ride out a little bit longer. And in fact, in this case of the last one, I'm gonna be watching it for a bit, and I may actually make a decision to, if this is not going up, I will close this and basically only reopen trading at a later point. So I'm actually looking at closing this already. I'm just going to observe for a bit. I may close this one, quite likely close it. Looking at the way it's behaving, probably close it, and then I will instead reopen the trading only when it hit critical level, and that will give it a lot of chance. So I am finding it a little bit strange because there are a couple of strong reversal signs, but there is no solid reversal. I think the market is just currently confused as to where the support level should be. So I'm going to monitor this for the next like 8 candles or so. Okay, and looking for like any bullish signs. I would love to capture about 20 pips here, because that can minimize the open floating loss. Maybe even allow us to close off some other positions to minimize the gap that needs to be closed as well. So that's the game plan for now. All right, stay put. If you're an FXTM investor and you see a drop in your equity, no, we did not take a hit. We took a small hit. All right, just gave it a day worth of profit to give it a better chance, and also to reduce reduce the floating loss growth, and give it a better chance for recovery. So it was a very sudden move, as I mentioned in the beginning of this video, and I do think that with big movements there will be big retractions as well. The market is after all like a spring, and I think after the weekend gap, obviously there has a lot of demand for for us to go in. Okay, right now what this means is that USD has dropped against the yen. Okay, so people are selling USD, buying yen, and I think that will create opportunity. Obviously, if you look at Euro USD as well, you see the top has already been formed. So I think it's USD JPY is not far behind. in that respect. So yeah, these are a couple of things I'm looking at, and just sit tight. All right, and let's just go for double digits this month. Bye for now.